Rich, did you want to get us started? No, I guess I'll get started. Um, okay, let's get started. Hello, everyone. Thanks for joining our webinar today, where we'll be discussing transforming certificate management with AI. My name is David Knuff. I'll be the host and presenter today. I'll review a quick couple of notes before we dive in today. Disclaimer, friendly reminder that today's discussion is for informational purposes only and is not legal or tax advice. Um, on your screen is our safe harbor policy. Please take a moment to review. We are recording today's session, so if you want to listen again or share it with a colleague, you'll receive a link and recording via email within the next 24 hours. The platform you're looking at can be customized, so feel free to move or resize the windows, and the additional resources sections contains the slide deck and other relevant links. There's several ways to engage with presenters and fellow attendees today. Please submit any questions you have for the speaker in the Ask a Question box, and then we'll be sure to get to those at the end of the webinar during the Q&A segment. You can also network with your fellow attendees today by clicking on the group chat icon at the bottom of your screen. So today, Rich is not able to join, but so I'll be presenting today. My name is David Knuff. I am a solution consultant here with Avalara. Been with Avalara for about 18 months, but a little bit of background about myself. Prior to joining Avalara, I did spend 30 plus years in public accounting, doing nothing but sales and use tax. Was a senior director with RSM. Prior to that, I was with KPMG, Ryan, and EY. And again, working with companies just like all of the attendees here today, helping out with sales and use tax compliance. So, pleasure to meet everybody via this webinar today, and let's get started. Um, to get us started, let me quickly walk through the agenda for today. First, we'll look at the changing landscape of tax compliance and why the old reactive approach is no longer enough. From there, we'll talk about why exemption management has become a C-suite issue, especially for CFOs and finance leaders who are increasingly being asked to think about compliance through the lens of risk, control, and operational efficiency. We'll also address the ownership problem because in many organizations, when everybody touches and manages certificates, no one truly owns it. And that's where the audit risk can begin to build up quickly and quietly in the background. Then we'll walk through the path to a more modern and scalable approach to exemption management, including a practical framework for moving from spreadsheets and manual processes to more automated AI-powered compliance. And finally, we'll close with Q&A. So as questions come up during the session, please drop them into the Q&A panel. We'll make sure to address those at the end if we have enough time, or we may reply via email after the event. So let's get started here. So before we get into this slide, I wanted to let you know that I'll be using a term ECM frequently. Uh, that stands for Exemption Certificate Management, or ECM. So let's start with the big picture view of where tax compliance is headed. The model many companies have relied on for the last decade has been largely reactive and heavily manual. At this point, that approach simply is not enough anymore. There are three major forces driving that change. The first is regulatory pressure. Since the Wayfair decision, economic nexus rules have expanded. Registration and collection requirements across more than 12,000 taxing jurisdictions in the United States have changed. Before and for B2B sellers, that has created a major increase in the volume and complexity of exemption certificate collection, validation, and management. The second is digital commerce and omni-channel selling. When orders are coming in through multiple channels, many exemption processes just do not scale. You can't just keep up with that kind of volume using a spreadsheet, filing cabinets, or shared drives. And the third item is AI and automation. The organizations that are getting ahead of the compliance on compliance are not really simply just working harder, they're working smarter. They're moving towards continuous real-time compliance where data flows across systems and exceptions are identified proactively instead of after the fact or reactively as they are now. So as you're listening today through this presentation, one practical question to keep in mind is this. Is your compliance model built for 2026 and beyond, or is it still built for 2010 and in the past? Um, what CFOs should expect from tax technology in the next 5 years? Because the stakes have risen, tax now sits in a very different place with business. It's not just a compliance function anymore, it's both a board level risk and increasingly a competitive differentiator. From a CFO's perspective, modern tax technology needs to accomplish two things at the same time. First, it needs to reduce exposure by making it easy to prove that the proper exemption certificates were collected, validated, and maintained. And second, it needs to free up the team for more strategic work instead of spending time re-entering data and chasing missing exemption forms. This slide shows the shift from the old model on the left here to the new model and what finance leaders expect today on the right. In the old model, certificate tracking was handled in spreadsheets, review and management was mostly manual, and ownership was spread across tax, sales, and operations. As a result, the process was fragmented and reactive. Teams were often scrambling when an auditor called or when a customer had an issue. The newer expectation in exemption certificate management is very different. It states that compliance monitoring when certificates and exemption statuses are being tracked in real time. It includes automated and proactive renewals, so upcoming expirations are identified early, outreach happens before there's a problem. It also requires cross-functional alignment with sales, finance, tax, and IT all working from the same system of record. And it depends on tight integrations with the tax engine. So exemption statuses and tax collection stay aligned across all of these sales channels. As we move forward through the rest of the session, we'll show how our ECM suite supports that modern compliance model from end to end. But before we do that, let's go into our first poll question. How are you currently managing exemption certificates? A, fully manual with paper, email, spreadsheets. B, partially automated with internal tools. C, using a dedicated ECM solution. D, outsourced to a third party. Or E, not sure. My guess is it's probably going to be B, is probably what I've heard, at least on my calls with customers. What do we have there for that? Let's see the
Looks like we
results.
got some A's and some D's.
Okay, great. So it seems like a lot of folks are either fully manual or they're partially automated with some internal controls. Okay, so we have it's kind of what I was expecting from this group. Thanks, everybody, for participating. Let's continue on now. Who owns exemption certificates? One of the biggest issues we see across organizations is unclear ownership. And when ownership is unclear, accountability tends to disappear. Tax often says it's an IT problem when the data is wrong. Operations may say it's a sales problem when customers don't submit the required forms. Sales, in turn, may say it's a tax issue when orders are delayed because of missing or invalid certificates. And IT will often say it's out of scope unless there's a clearly defined project set up for it. Meanwhile, in the background, certificates expire, renewals don't happen, and audit exposure quietly continues to grow. In contrast, high-performing organizations take a different approach. They treat exemption certificate management as a cross-functional business process, not a clear, not a cleanup task for the tax department. And they define a clear designated owner, often within tax or finance. They establish service level procedures for collection, validation, management, and renewal of all of these certificates that they collect. And they track shared metrics, such as percentage of exempt revenue supported by valid certificates, the time it takes to resolve missing certificates, and any audit adjustments. So as we continue on with the presentation, take a moment to consider who truly does own exemption certificates in your organization right now. Polling question 2. What is your biggest challenge with exemption certificates? A, collecting certificates from customers. B, validating accuracy and completeness. C, tracking expirations and renewals. D, storing and retrieving certificates for audit. Or E, keeping up with changing tax rules. My guess here would probably be that it's uh, probably A or B is probably what I would guess.
Yep, we have some Bs and Es.
Okay, great. So it's good to know where folks are at. So validating accuracy and completeness, and then keeping up with changing tax laws. Okay, great. Let's continue on here. Breaking down silos between tax and finance and sales. Most exemption management problems aren't just technical, they're really organizational design problems. Across companies, we tend to see three major gaps. The first is the gap between tax and sales. Sales teams often onboard exempt customers without collecting certificates at the point of sale. When certificates do come in, they're frequently incomplete or not from the correct jurisdiction. I've even seen customers submit a picture of their cat or dog, so you never know what you're going to get when customers are submitting their own exemption certificates. The second is the gap between tax and finance. Finance teams feel the impact when audit assessments are triggered by expiring or invalid certificates. And the challenge is these assessments can come from a surprise because they're underlying risk that was never clearly visible. The third is the gap between sales and the customer. Customers become frustrated when they're asked to submit the same certificate multiple times. In some cases, exempt orders are delayed or put on hold altogether, which can hurt both the customer experience and revenue for the company. The solution here isn't just a better spreadsheet, it's about creating a shared system of record, one where exemption data flows in real time across tax, finance, sales, um, and e-commerce and billing, and even with every team is working from the same single source of truth. So everybody needs to be working from that same source of truth, have the same metrics, and that's exactly the role Avalara's ECM plays with compliance within the compliance process. Manual certificate management is dead. Let's talk about symptoms. What are we? What are the warning signs that manual certificate management has reached its limits? You might see certificates stored across email folders, shared drives, or even physical binders. There's often no real automated expiration tracking, so people rely on memory, information list, informal list, or keeping just to keep things up to date. Certificate validity may only get checked when an auditor asks for it or when a customer problem surfaces. So companies that I deal with, they're just not thinking about certificates, and these liabilities can really grow in the background. You may also notice that the same customer is asked to provide the same certificate multiple times. And when an audit does come up, reconciliation could take days or even weeks to pull everything together. Now let's compare what the modern organizations are doing to manage their exemption certificates. They're using AI-assisted validation at the point of ingestion, where certificates are automatically reviewed for completeness. They're applying intelligent document processing so certificates can be classified and routed without a lot of manual effort. They're managing the life cycle proactively with expirations flagged early and renewal outreach triggered automatically within the system. And importantly, they're operating from a unified data model. This model says that certificate status is visible in real time across ERP systems, e-commerce platforms, POS systems, and billing. So at this point, the question is, it shouldn't, or the question isn't, Should we automate? It's really how much additional risk or exposure are we willing to accept by delaying automation? Next, we're going to jump into the next polling question here too. So poll question 3 here. What level of automation do you currently use for exemption certificate validation? A, none, fully manual review. B, basic checks, required fields only. C, moderate automation with some validation rules. D, advanced automation with real-time validation. Or E, not sure. If I had to guess here on this one, I would probably say um, C and B are probably the two that I would think are the most common.
We have A for manual review and B, advanced automation with real-time validation.
Okay, so we have a wide spectrum there. So we have the fully automation with real-time validation, and then we have the fully manual review process. Okay, great, great. Uh, Continuing on here, why ECM should be a C-level conversation. When you bring this back to the C-suite, there are 5 clear reasons why ECM really belongs in the boardroom. First, audit liability is a real balance sheet risk. Missing, expired, or invalid certificates can cause tax liabilities, penalties, and interest that accumulate across the full audit period. That's not a minor compliance issue. It could become a real material financial exposure. Think of the sales tax that you're collecting from your customers. When you're currently acting as an agent, collecting that sales tax from them, acting as an agent of the state, collecting that tax, passing it on as sales tax on the return, paying it to the state. But if you have missing or invalid certificates, that tax that you didn't collect because you claimed an exemption or that customer claimed an exemption can become your liability if you don't have the proper documentation to support that. So, very important distinction here. You start off being that pass-through entity, but if you don't collect that exemption certificate to support that exempt sale, the state can't come back to you and say you owe that tax plus interest and penalty. And if they're doing sampling, that could really even explode into even much larger liability because when they're using sampling, what they're typically doing is they're taking a result on a select number of transactions they review and extrapolating that over the entire audit period. So that $100 invoice, which is missing an exemption certificate, could end up costing you $1,000, depending on how that audit's structured. So again, it's a very important distinction just to kind of remember here. Second, tax accuracy depends on good exemption data. If exemptions are applied incorrectly at scale, over exempting or under exempting, the result is inaccurate tax liability. That creates both financial and operational risk for your organization. Third, customer experience is directly affected. When exemption processes are slow or inconsistent, it could lead to cart abandonment, delayed orders, customer churn. That's especially important in high volume B2B environments where buyers can expect, where they do expect speed and accuracy in submitting exemption documentations. Fourth, regulatory complexity is increasing every year. More jurisdictions, more certificate types, and more expiration rules make manual processes harder and harder to sustain. And fifth, AI is changing what's possible. Organizations that treat ECM as a strategic investment can process exemptions faster, improve accuracy, and reduce cost at the same time. So the takeaway is this. ECM is not just a compliance cost center. It's a point of operational leverage that affects risk, revenue, and your customer's experience. Uh, Bad data, big risk. One critical point that many organizations miss is that certificate problems usually don't start in the exemption workflow itself. They'll start upstream in the customer data. The most common upstream failures we see are straightforward but costly. Sometimes the contact data is poor, so maybe you have an incorrect email. So when you send out that request for a new certificate, updated certificate, that email bounces or never gets to the right person. Sometimes there's duplicate accounts, which means certificates can get attached to the wrong entity. In other cases, records are stale, so exemption certificates remain in the system with no renewal activity. And sometimes key information is missing, like tax IDs or exemption reasons, which makes certificates difficult to validate and even harder to defend during an audit. This slide shows a simple example from an audit, a sample of 100 exempt transactions. In the sample, 30 have misaligned customer records, 15 have expired certificates, and 10 have incorrect jurisdictions. What this is telling us here is that roughly 55% of the exposure in this sample is being driven by bad upstream data, not just breakdowns by the exemption process itself, but problems with the ERP and customer data and not being able to quickly and accurately identify that customer that's missing a certificate or the contact information to be able to quickly and accurately reach out and get that new certificate. So the takeaway here is really clear. I mean, a modern ECM strategy has to address both sides of the equation. It needs strong data quality upstream and needs to process automation downstream. Why missing certificates are a balance sheet liability. From a finance perspective, missing or invalid exemption certificates, they create real liability. The accounting reality is simple. Unvalidated exemptions are not just a compliance issue, they represent potential balance sheet exposure. In many cases, finance has to reserve for potential tax, interest, and penalties, and they can directly impact your financial statements. When you have exempt sales without supporting documentation, those sales can effectively turn into unrecognized liabilities. When I was back in public accounting, I had done audits before, and sometimes those audit results were not the greatest. And I've seen customers actually have to, or taxpayers, I've seen customers, taxpayers actually have to put something on their financial statement, a footnote or something, indicating that they had a big liability because they had missing exemption certificates. So it's a real thing, and I've seen it in real life. Um, that's why we really need that strategic reframing. CFOs who view certificate gaps as just a tax team problem may be carrying undisclosed balance sheet risk. Certificate management is a real liability management. Uh, it's not just an administrative overhead. And because of that, ownership should sit with the CFO's broader risk framework, not buried in some ad hoc operational process. There's also a clear operational benefit. Forrester TEI study found that organizations that ensure certificates are completed correctly can eliminate about 406 hours of work annually. That's a significant efficiency gain and one that really translates into meaningful financial value. Now what's the question? How do we actually modernize this exemption certificate process? This slide lays out a four-stage maturity journey. Stage one is ad hoc. Certificates are managed by individuals, stored in different places. There's no real expiration tracking. In that environment, risk is high and scalability is essentially non-existent. Stage two is a centralized manual process. At this point, there's at least a shared system of record, maybe a shared drive or basic repository, but validation, renewals, and reconciliation are still being handled manually. So while there is an improvement, the risk is still fairly high and scalability is still very limited. Stage three is automated collection. This is where organizations began using customer portals and digital certificate collection. They add automated validation rules and run proactive renewal campaigns. Risk comes down meaningfully here, and scalability starts to become much more real. Stage four is AI-powered compliance. At this level, you have real-time AI validation. You have consistency across channels, the different sales channels. Audit-ready documents are ready to retrieve as Customers have questions or auditors have questions, and you have a full integration with the tax and ERP systems. That's where the risk is lowest and scalability becomes enterprise grade. One thing that we really do see all the time is that organizations tend to overestimate how scalable their stage two environment really is. And they really tend to just kind of underestimate the operational and risk reduction benefits of moving to stage three or to stage four in their process. Our ECM suite, and AI validation assistant are purpose-built to help customers advance along that exact maturity curve. Ever-increasing business challenges. Layered on top of the maturity model are the real-world challenges that most organizations are dealing with every day. One is poor renewal management. When expired certificates slip through the cracks, another is decentralized receipt and storage, which makes it easy for certificates to go missing or remain incomplete. There's also the issue of collection friction. When the process is difficult for customers, it creates a poor customer experience and slows down everything. So you don't want your customers to be upset because they're trying to buy something exempt. You want to make a smooth, easy flow process for them. On top of that, many teams are dealing with resource constraints. They simply don't have enough people or time or expertise to validate all of their certificates correctly. And even when they do, the rules themselves are complex and changing. Different exemptions require different certificate types. Requirements vary by state, and multi-state nexus adds another real layer of complexity and difficulty. The end result is reduced confidence and compliance and greater financial risk when audits do happen. That's the environment customers are dealing with, and it's why organizations really need to turn to Avalara ECM to solve these challenges in a more structured way while reducing operational burden and audit risk. Next here, we have polling question 4. Have you experienced an audit or assessment related to exemption certificates in the past 3 years? A, yes, resulted in significant penalties or assessment. B, yes, minor findings or adjustments. C, yes, but no issues were found. D, no, but we're concerned about potential risk. And E, no, we feel confident in our compliance. I'm saying probably A or B are probably going to be the most frequently selected, would be my guess.
We actually have some C's and D's. No issues were found, and some were concerned about potential risks. And one that they feel confident about their compliance.
Okay, great. So let's continue on here. Understanding exemption certificates. So let's start with the fundamentals of exemption certificates. In some cases, your business or your customer may qualify for tax-exempt treatment on certain types of transactions. But to support that exemption, there has to be a valid exemption certificate in place. For that certificate to be valid, a few things need to be true. It needs to use the correct form from the jurisdiction. It needs to include a valid exemption reason, and it needs to be issued in the jurisdiction where the transaction takes place. And it also needs to be completed, totally completed. All of the required fields need to be included, as well as a signature. From a process standpoint, the buyer provides the exemption certificate to the seller. The seller has the responsibility for 3 things. They need to collect the certificate, they need to validate that it's the correct certificate, and they need to store it in a way that is accessible and defensible in the event of an audit or any customer questions. Every exempt sale should ultimately be supported by a valid certificate that can be found quickly and relied on with confidence when needed. Basic exemption management steps. On this slide, you can see 5 core steps in exemption certificate management. The first is the consumer actually exempt? Once a new customer record is created, you need to determine whether that customer should be treated as taxable or exempt for specific purposes of purchases of products and or services in specific jurisdictions. The second step is really requesting that exemption certificate, and that's where a lot of the variation shows up. You're requesting it by email, sometimes you're requesting it through a portal, or maybe even a paper form. And just as importantly, who owns that step? We talked about this earlier. Is it sales, accounts receivable, tax, or customer service? There needs to be a clearly defined owner of that process. Otherwise, they tend to fall through the gaps, slip through the gaps. The third step is validation. Is the certificate actually valid? Is it the right form for the jurisdiction? Does it include a valid exemption reason? Is it complete and signed? Do you have the expertise and tools to validate all of that efficiently? The fourth step is storage and retrieval. Where do those certificates actually live today? And are they sitting in an email inbox, shared folders, or a dedicated ECM solution? And if an audit request comes up, how quickly can you pull the right certificates by jurisdiction, date, or customer? I know when I started off in public accounting, I worked for one of my first clients. They had like 20,000 exemption certificates, and we just didn't have the resources to help out to validate all of those certificates. So what we did is we hired a couple of interns to come in through the summer. And just to show my age, this was back many years ago, before email was commonplace in business. So we actually had to go through a process of printing out requests for exemption certificates and mailing these out to customers, waiting to get that mail back, looking at those certificates and validating those certificates, and then putting them into the system and associating them with that customer's account. And then we had to store all of those in a filing cabinet. I think we had like two or three big, tall filing cabinets full of exemption certificates. So the old manual process like that is dead and it just doesn't work. Back to the presentation here, the fifth step is really updating your systems. Once the certificate has been validated, is the exemption updated across your various sales channels, your ERP, your e-commerce platforms, and all of your point of sale systems? And our expirations dates being tracked so renewals can be requested proactively instead of reactively. When any one of these steps breaks down, exemption certificate management becomes manual, more inconsistent, and much more difficult to defend under an audit. Next, we're going to talk about the Forrester TEI impact of Avalara. This is a study. This is a study that we had commissioned. The study was to help quantify the impact of automating tax compliance. Avalara commissioned this independent Forrester total economic impact study, or TEI study as they call it. That study was based on interviews with 6 different customers at Avalara across a range of industries, including manufacturing, retail, software, medical devices, and professional services. The companies included in the study range from about $24 million in annual sales to $8.3 million in annual revenue. Each of them had been using Avalara's AvaTax, our managed returns service, exemption certificate management, and Avalara's tax research tool, ATR, for at least 6 months. Using those interviews, Forrester built a financial model to estimate the benefits, cost, and return on investment that organizations can expect when they automate tax compliance with Avalara. And next, we're going to highlight a few of those findings. Looking at the composite organization in the Forrester study, the business case for automating exemption certificate management is pretty compelling. Forrester found an estimated ROI of 153% with a payback period of less than 6 months. Over 3 years, the estimated present value of the benefits was about $769,000. Now, to put that in context, the composite company in the study had about $300 million in annual revenue. They processed about 10,000 transactions per year, and managed about 2,000 exempt customers and received about 100 new exemption certificates annually and filed about 400 returns each year. When Forrester broke down the value, several benefits stood out. First, by ensuring that exemption certificates were completed properly, the organization eliminated 400 hours of work per year, 416 hours of work per year. Second, audit preparation became much more efficient with an 85% improvement, which translated into about 34 hours saving per audit. I know when I did audits for my clients when I was in public accounting, that was usually a daunting task at the beginning of that audit process. They would receive a notice that the state of whatever is coming in to perform an audit. They're performing it for this period. They want these records. They want, fixed asset records. They want purchase records. And along with all of those items, they want exemption certificates. So there's lots of different items to try to gather, try to assemble, and get ready so that you have them available when that auditor does walk in the door. Third, organizations saved about 510 hours annually on managing and filing tax returns. It also reduced reliance on third-party tax experts, saving about $150,000 per year. So the measurable value here is it comes from labor savings across tax filings um, and exemption certificate management, improved efficiencies in audit preparation, avoided penalties, lower spending on outside services, and reduced sales tax liabilities. But the story is not just about hard numbers. Customers also reported important strategic benefits that are harder to quantify, including general confidence in compliance, easier expansion into new jurisdictions, improved credibility with customers, and more time for teams to focus on the core business instead of focusing on tax administration. So, taken together, the results really do show that both a strong financial return and a meaningful operational advantage. Um, this slide here, tax exemption certificate labor savings, this slide highlights one specific quantifiable benefit. That's labor savings in exemption certificate management. In the Forrester study, organizations saved about 30 minutes per certificate by using Avalara's ECM solution. Uh, for the composite organization, again, that they studied, that translated into about $97,000 in value over a 3-year period. You also see a quote here from an executive tax director in a manufacturing company. He said, using Avalara's exemption certificate management tool has been an amazing transformation for us. We zip out the files based upon the query we get from the auditor. It's so fast, and then we could go through them electronically, check them, and then send them off to the auditor. So again, instead of going through those filing cabinets, looking for those certificates, maybe they're hard copies. Maybe you even have an advanced, shared drive where you save all of these. Maybe you save it by customer name, and maybe you have an abbreviation for the states that it applies to after the certificate. That process may be helpful to some extent, but it's really not scalable. If that auditor needs to see several hundred certificates, that's going to be a difficult process to go through those and identify all of those certificates. A solution like ECM, you could just run a basic query right out of it, create that zip file. From that zip file, you're also going to have a spreadsheet with a list of those exempt customers, and you'll be able to hand that off to the auditor very quickly without having to dig through all of those files. So that's really the goal, moving away from scrambling through folders, emails, and disconnected records, and towards a process where audit-ready certificate exports are fast, organized, and easy to deliver. Continuing on here, let's look at audit preparation because this is one of the areas where value becomes very tangible. When everything is organized, complete, and easy to retrieve, teams spend far less time responding to auditor requests. In the Forrester study, again, that translated into about 34 hours saved on audit preparation alone. along with avoiding penalties and lower cost audits. That was one audit, 34 hours saved on audit preparation alone for that one audit. For the composite organization, those benefits added up to around $210,000 in financial impact over a 3-year period. There's also a strong customer voice behind that number. One CFO in the medical devices industry said the value of Avalara is a key component to avoid fines and penalties from states, sales tax audits, which would cost a lot more than what I pay a year for Avalara. So again, they're saying basically, having this tool, having these exemption certificates organized, complete, and easy to retrieve saves them not only customer experience and better customer experience, but also saves them sales tax money on audits, which pays for itself basically. So this isn't just about efficiency, it's about reducing audit stress, lowering exposure, and saving real money. Let's bring this back to the solution here. Avalara Exemption Certificate Management, or ECM, is our next generation platform for collecting exemption certificates, validating those certificates accurately and efficiently, and maintaining audit-ready compliance at scale. There are a few key capabilities behind that. First, the user experience has been totally reimagined. The interface is modern, streamlined, and built for speed and clarity. Second, the platform brings advanced automation and intelligence to certificate collection and AI-powered validation. That helps teams reduce manual efforts while improving consistency and accuracy. Third, it includes strong campaign management tools so teams can run more targeted outreach and renewal efforts instead of relying on one-off reactive follow-ups. And fourth, ECM offers broad integration options. It connects with AvaTax, more than 35 other ERP and e-commerce platforms, and other leading tax engines. So exemption data can flow across the platform in the systems that matter. Taken together, um, all of this designed to really improve the efficiency, strengthen the audit readiness, and raise the overall level of compliance that your organization has. Now let's focus on the ECM AI Validation Assistant. This capability helps automate one of the most time-consuming parts of the exemption certificate management process. It can extract key certificate data automatically, including details like name, address, tax ID, expiration date, and form type. It also validates required fields, checks expiration dates, and flags inconsistency or missing information across many certificate types. So instead of just discovering problems later on during an audit, teams can identify expired, incomplete, or mismatched certificates in real time and correct them much easier in this process. The key here is to be ready for that audit, not to wait for the audit and then try to get ready, but to have a system and a process in place where you manage those certificates and store them in a place where you could easily retrieve them in the event of an audit. Another important benefit really is consistency. The AI validation assistant applies the same validation logic across large volumes of certificates, which helps standardize the review and reduce variability from one reviewer to another. Again, think of it when one person is, their job is to review certificates. Maybe they're out, maybe somebody else is reviewing the certificates. They may have a little bit of a subjective approach to reviewing those and may not necessarily agree with whether a certificate is valid or not. ECM really eliminates that because it provides AI logic to validate those certificates. Thus, it's ensuring that the same type of logic is applied to each and every certificate. So if one person approves a certificate, another person would have approved that same exact certificate. Behind the scenes, ECM uses OCR to read and capture data from certificate images and PDFs. It also uses machine learning to recognize standard forms and assess whether the correct form appears to have been submitted and completed. properly, and it's for the supported states, and we can even verify IDs. Some states will have a portal where you can actually verify that customer of yours has a valid sales tax number or resale number. Some states do allow you to validate that, and there is a place within our system to actually click on that and get that real-time validation. Again, that only works for those states that allow that process. In summary, ECM uses OCR to read certificate images and PDFs and extract key data. It also applies machine learning to identify standard forms, evaluate whether the correct form appears to have been submitted and completed properly. And for supported states, again, as I mentioned earlier, ECM can also verify tax IDs. About exemption certificate management. Before we move deeper into the workflow, let's take a step back and look at what ECM is really designed to deliver for our customers. At a high level, ECM is built to support organizations of every size and level of complexity. The goal is not just to store certificates, but to make the entire exemption process easier, faster, and more reliable. At the center of this centralized collaborative management, instead of exemption certificates living in a disconnected inbox as folders or spreadsheets, teams can work from that single shared system of record. ECM also makes certificates collections much easier, much simpler, giving businesses an easier way to request and receive documentation from customers. At the same time, users have access to tax research and a law library resources that help support better decision making around exemptions. From an operational perspective, the platform is built on modern technology that supports faster reporting, automated validation, and intuitive user experience. It also enables teams to respond to auditors much more quickly and much more confidently, streamlining the certificate creation and reducing the friction that often slows down the process. So when you pull it all together, ECM is really about taking what is often a fragmented manual process and turning it into something centralized, scalable, and much less stressful for both the business as well as the customer. Um, this slide goes a little deeper into how OCR driven validation works in ECM. At the basic level, ECM uses OCR technology to read and capture data from many standard exemption forms. Once that information is extracted, it's automatically added into the platform so they can be tracked, reported on, and used throughout the validation workflow. OCR is what allows the system to recognize text inside PDFs, uploaded images, and other digital documents. And for many standard forms, it could do more than just read the text. It can also help determine whether the document appears to be valid by checking whether it is the correct form and whether it is filled out completely. Those documents that can come into ECM in a few different ways. They could be uploaded, submitted via the portal, or they can even flow directly into the platform through various integrations. On top of that OCR layer, we apply machine learning to identify issues like incorrect forms, missing signatures, or other deficiencies. And more certificates are processed. The system actually learns and improves over time, which helps to increase the accuracy and consistency. For teams managing high volumes of certificates, that's really what makes AI assistant validation such a meaningful shift. Instead of relying on that manual review and that visual inspection, you can move to a process that's much faster, scalable, and much more consistent. This slide shows how ECM is designed to manage the full life cycle of both customer and vendor certificates. In addition to just managing those certificates that you're receiving from your customers, the system can actually manage those certificates that you're sending out to your vendors. Why would you want to do that? If you're sending out certificates to your customers, I'm sorry, to your vendors and making exempt purchases, if that certificate that you sent to that vendor expires, then that vendor is going to start charging sales tax. And then you're going to have to go through that process of giving them a new certificate, having them reissue that invoice. So again, this system allows you to proactively make sure that both you're getting exemption certificates from your customers, but also being able to provide those to your vendors. At the highest level, it gives teams one place to manage incoming and outgoing certificates. Instead of relying on scattered inboxes, spreadsheets, or disconnected processes across different departments, it also supports the full range of sales channels, whether those transactions happen in store, through e-commerce, or through field and inside sales teams. That matters because exemption certificate management has to work, it must work consistently whenever the sale happens, wherever sale happens also. Another important capability is digitization. Existing paper certificates can be converted in a single step, captured through OCR and stored centrally, which helps organizations move away from a manual filing and fragmented record keeping. From there, AI-driven validation helps automate the review process. Certificates can be scanned, read, and evaluated automatically, and the system could even flag invalid forms or missing information for follow-ups before those issues create downstream audit liability risk. And because certificate management is not just about collection, it's also about maintenance. ECM includes campaign and mailing tools that make it easier to follow up with customers for those renewals or missing details. So the real shift here is moving from a mindset of we think we have the certificate somewhere to we know we have valid current certificates and we could prove to an auditor or others when it matters. Avalara Exemption Certificate Management Suite. This slide outlines the three ECM offerings, and the easiest way to think about them is by matching the solution to the customer's level of complexity or the taxpayer's level of complexity. The first is ECM Essentials. This is an add-on for AvaTax users. It's best suited for those organizations that only have a few hundred certificates or fewer and relatively low exemption complexity, nothing too complicated. It's focused on the fundamentals of certificate collection, management, along with real-time invoice verification. Next is ECM Pro. This is our flagship ECM platform, and this option that fits most of our customers. It brings together powerful automation, strong integration capabilities, and the flexibility to support a wide range of business sizes and complexity levels. It integrates with AvaTax and other tax engines, includes an e-commerce module, and can operate as a standalone solution without ERP integrations. It also offers optional services for onboarding, collection, validation, and ongoing maintenance. And importantly, this is where AI validation assistance is included. Then there is, over to the right here, is ECM Premium. Premium is designed for those businesses with more complex exemption requirements. It includes everything in the Pro, along with the additional configurability, customizable templates, and retail module that really supports certificate collection at the point of sale, really complementing the e-commerce module. So the key takeaway is that whether a business is just starting to formalize an exemption certificate management process or plan, or is dealing with an enterprise level complexity, there is an ECM option that aligns with their needs. Now let's go to the final polling question here. Would you like a follow-up from Avalara? A, yes, B, no, or C, maybe later. And as everybody responds to that, that concludes our presentation for today. Thank you, everybody, for your time and attention. Right. See everyone.
Yep. Thanks, David.